Well, hello there. This is Slav Polinski, Slav Polinski Homes with App Properties in Downers Grove. And with me today is guaranteed rate lender, Michael Gambatese. Say hello, Mike.
Hey, how's it going, Slav?
Really good, thank you. And just to get people caught up, we had a conversation, maybe 2 weeks ago. We covered both the real estate market back then, as well as the mortgage industry, what's going on with the mortgage industry back then. And I feel it's a great idea just to keep our clients up to date on the changing market, which has been literally changing every week.
Right. And we've kind of just had to have our heads on a swivel, so to speak, in terms of what's been going on and kind of making adjustments on a daily basis. The good news is that as you and I have talked about, it's business as usual, still closing loans. We have not had any issues with closing loans. So we're just trying to make sure that everybody, stays engaged and knows what's going on. And we're just trying to provide people with as much information as possible.
Exactly. And being on the topic of, still doing deals, still closing homes. I have a few stats here I'd like to share with our public, because there's still people out there that think the real estate industry has come to a screeching halt, which it has not. Has it slowed down? Of course, it's not where it would be normally in April and May on a typical year. However, things are still moving forward. So I'm going to go back just 7 days in just Downers Grove and a couple other communities around here. In Downers Grove alone, there have been 18 homes that went under contract this past 7 days, 12 new listings, and 25 closings. What's interesting about that, of course, there are more homes that have gone under contract that have come on the market. And I see that across the board in several of the towns I looked at. And that shortage of inventory, while people are still out there looking, is help keeping home values at where it is and not declining. So now in Naperville, of course, it's a larger community. We've had 50 homes go under contract. And this is, when I say homes, I mean single-family homes, townhomes, and condos. So 50 that have gone under contract last 7 days, 43 new listings that have just entered the market in the last 7 days, and 59 closings. Westmont, being a smaller community, had 5 homes go under contract, 3 new listings, and 4 closings. Lyle, 10 contingent, 10 gone under contract, 8 new listings, and 11 closings. Again, on each one of these communities, there have been less homes coming on the market than have sold. And, this is what my buyers that I've been working with directly are experiencing. They've been waiting for the right home to come on the market. They are eager and willing to buy right now in the situation we're at, because they really want to get in a home this year. However, they're waiting for the right home.
Right, and I think that's really an important distinction that you're making, is that is a good message to communicate to your sellers. Say, listen, there are buyers out there. Interest rates are low. People have not slowed down looking. So if you have clients who are maybe a little skittish about putting their houses on the market because of things going on, this might be the absolute perfect time to do it, simply because the buyers are out there and they haven't slowed down. And with interest rates still being almost at all-time lows, that's keeping people engaged as well. So the fact that we are not slowing down lending at all, and the fact that interest rates are low, is keeping people, engaged. And I think people, smart, savvy buyers, see opportunity out there. So I think that's a good message for your sellers.
Absolutely. In this last 7 days, I've had 3 listing appointments, appointments where I would go out to people who are interested in selling their homes yet this year. And we talked about not only the market, overall market, just the changes we have made as a real estate industry to show homes during these times, which include more 3D virtual tours, floor plans of homes, virtual walkthroughs, virtual open houses, and so forth. The importance is, especially when we're representing a home, is to engage the buyers out there who are looking online first before they make that decision to come out and view a home physically.
Right, and we've kind of piggybacked off of that and have, changed the way that we do our appraisals and things like that. And so, that's another thing that people have been concerned about is how is my house going to get appraised? How is my house going to get inspected? We're working with the appraisers on a daily basis to make sure that all the necessary precautions are taken to do, whether it be virtual appraisals on FaceTime or other media like that, or even we're getting a lot of desktop appraisals approved now too, which is literally all the way up to 90% loan to value, meaning 10% down. We're getting appraisal waivers, which through Fannie Mae and Freddie Mac is allowing us to actually close deals without the appraisers actually going out to properties.
Yeah, that's a great point. And actually, my last 3 closings, I've had one of each. I've had one of our appraisals being waived. I've had another one where it was a desktop appraisal. And the last one, the appraiser actually did come out to the house physically, but asked if I would be there first to turn on all the lights, open the doors, so that he wouldn't have to touch anything in the house.
Right. Well, I just had a buyer who specifically, we ran it through the automated underwriting system. We're able to get an appraisal waiver, but the buyer still asked to have an appraisal done because just they want to make sure that the property is worth what they're paying, which is understandable. So in that sense, we were able to do a combination of a desktop appraisal with an exterior photos. So the appraiser still didn't have to come in to the property, but they were able to do a drive-by inspection of the property to make sure that, everything is the way it should be.
Sure. So I have a question around that. With the increase of desktop appraisals where the appraisers are actually going by the photos that the realtors post online on the listings, but they can't really see all of the updates or all of the upgrades or have access to all that information. Are you seeing an increase of homes that aren't appraising out at the purchase price?
I personally have not, and I've asked around to a lot of my colleagues too, who are doing kind of the same volume of business, if they're seeing appraisals coming in lower, and we have not. Contracts are flying in from the city all the way out to Lake Zurich, and the appraised values are holding up. And I think that goes back to what you were talking about earlier, where there's just a demand of buyers with a shrinking inventory. Mm-hmm. So I'm not seeing home values going down. Now, if we fast forward 6 months, 12 months from now, is that possible? Certainly. If there's some people that are in distress and just need to unload their properties, but I don't think we're even close to that right now. I think the whole home values are remaining strong. And if there ever is a question about some finishes in the house and we can't quite find a comparable to that house because of some finishes that have been done, well, I think that's an actual situation where we would say to the appraiser, all right, listen, maybe this is a good idea and a good opportunity for you to go into the house or maybe do, a virtual appointment with the listing agent to actually take photos of the interior of the property, simply because we can't find a home with similar finishes.
Yeah, that's a great point. I think on that, we all have to be a little bit more flexible right now with our current situation or circumstances to get things done, to make sure that the people who want to buy or sell their home, that their investment is protected.
Right.
And we do everything we can to make sure everything moves forward and gets closed and gets finished for them. And you brought up a couple of good points while you were talking. Number one, what happens if people that come into difficulty with their current mortgage. Before we get to that, one of my clients asked me that they heard that there are currently stricter guidelines around being able to qualify for a mortgage today as of compared to maybe 3-4 weeks ago. What are you seeing?
Well, on the conforming side of things, meaning on loan amounts up to $510,400, the guidelines to qualify for a mortgage have not changed a whole lot. I would have to say maybe the one area that we've gotten a little bit stricter on is just verifications of employment, just making sure that people are still employed and are we're still qualifying them under the same qualifications where we initially maybe pre-approved them for. So we are now verifying employment a couple more times throughout the process, and then we're getting pay stubs all the way to the closing date, which we didn't have to do before. And those are really, COVID-19 new requirements that Fannie Mae and Freddie Mac are requiring of us, and doing verbal verifications of employment on the day of closing. So I would have to say that's probably the only area where things have gotten stricter. On the jumbo side of things, there has been some tightening and some requirements that have changed a bit. But on the conforming side, we're still closing loans at very low rates with the same level of ease that we have always.
Good to know.
Yeah.
And really checking the employment verification more often is a benefit to not only the buyer who's trying to get the loan, but also to the seller, because if there's an issue, we want to know about it well before closing.
Right, and we're just
both sides.
Right, and we're just encouraging our clients to just have an open line of communication with us more so than ever. If there's going to be a reduction in pay, just let us know, and we'll run the numbers and qualify you on the reduced pay. There's absolutely no benefit to anybody to have a deal blow up in the 11th hour because somebody didn't tell us that they were furloughed or that they had a reduction in pay or that they were going to be laid off. So it's just really encouraging people to keep the lines of communication open so that we can work. The more time I have to fix something, the better. Put it that way.
Yeah, absolutely. Great information there. Next thing I want to talk about is there have been several articles online about mortgage relief efforts in the CARE Act, and as well as rental relief programs. What do you know about that, and what are your thoughts about that in particular?
Yeah, you're right. There's been a lot of information out there, a lot of good information, and then a lot of bad information too. So I think the most important thing to communicate to your clients and anybody who asks is if anybody currently has a mortgage and they're currently experiencing some sort of pandemic-related economic hardship, that they talk to their current servicer who they're currently making their mortgage payments to, and talk to them and see if they qualify for any type of forbearance. And that's really the most important thing, rather than just doing some research online and then stopping making your mortgage payments. There's an actual process that they need to go through, and every servicer of every single mortgage has a different process. So the main thing to keep in mind is when talking to your servicer of your mortgage is if it's a federally backed servicer. If it's a federally backed servicer, meaning Fannie Mae, Freddie Mac, VA, FHA, things like that, then there are possibilities for forbearance. And if you qualify based upon an economic hardship due to COVID-19, then the servicer is going to basically give you some options on what you can do, initially up to 6 months of forbearance. And then after that 6 months is over, there's a possibility of an extension for another 6 months. So it could potentially be up to 12 months should you qualify. And I know that we've talked about this before, Slav, but the main thing also to be communicating to anybody who asks is that a forbearance is not a loan forgiveness. You will be responsible for making up those payments at some point at the end of the forbearance. And the individual servicer is going to give you options as to how you go ahead and make up those payments. Number one could be a lump sum payment. So if you're in a better financial situation at the end of the forbearance and you're able to make a one-time lump sum payment, great. That's probably how it would be preferred. And then there's also a payment plan option, typically, where they'll take the amount of money that you, mortgages that you put into forbearance and spread it out over a term. And then the other type of option that some services are allowing is a potential loan modification. But again, each servicer is different. So I urge people to really have a conversation with their servicer to see what opportunities there are if they're experiencing a hardship. And the one thing I do want to mention as well is that because of the influx of phone calls and inquiries with the servicers, that there may be a delay as to how long it will take to get a hold of the servicer. So I've been urging people to just kind of hang in there and keep trying their servicer as many times as they possibly can to get the information they need. But at the end of the day, if you have the opportunity and the ability to make your mortgage payments, that is definitely the most paramount, and continue to make your mortgage payments if you can.
Yeah, absolutely. Great information there. And as you mentioned, I would imagine that the calls coming in to these financial institutions has to be just at an increased amount compared to usual. So whatever plan, let's say a person would decide to agree upon with the financial institution for forbearance, is really recommended, I read, to keep the documentation on that. Because of the increased amount of volume of calls, there's also the increased chance of mistakes being made or things not being recorded right. So please, if it's something that you're considering doing, make sure you keep all documentations regarding that, and as well as the plan that you have agreed upon. And as you mentioned, some of the options might be that the mortgage gets added on those months at the end of the term. And I've also read, like you mentioned, that at the end of the 3-6 months, a lump sum might be required to get caught back up. This is not a forgiveness. This is just trying to help people get through this time.
Right, and two things you mentioned there which are really important. Number one is to get it in writing. Whatever forbearance agreement you come to with the servicer, absolutely paramount to get it in writing. That's number one. And then number two is the fact that because of the influx of forbearance requests from servicers, we've gotten word that now that there's a lot of scams going on too. Right. So really to be careful about what you're doing, who you're getting phone calls from, and just make sure that you're actually communicating with the servicer of your mortgage.
Absolutely. Great advice there. And on that topic, and along with, there's similar programs for renters as well. There's a cost to all of this. So, of course, this is necessary to help people get through it. But on the other end, these institutions are getting affected by not getting their payment, not getting their interest payments for a period of time. How do you see, if any, that this might impact the mortgage industry maybe 6 months or a year down the road? Meaning, we possibly see higher interest rates to make up for this?
Oh, that's a great question. And without having a crystal ball, I would have to say that my, kind of guess to this, educated guess, would be that there will be some sort of impact to the mortgage federally backed, right? Fannie Mae and Freddie Mac own the majority of the mortgages out there. So as the federal government continues to be affected by this pandemic, the mortgage industry will also be affected by this as well. Now, will we see something along the lines of what we saw in 2008? It's hard to say, but I would have to say in terms of interest rates, the forecast right now is that we're going to stay probably in the mid to upper threes throughout the year, which is great for everybody, for buyers and sellers. And I think that, coupled with the fact that we're in the middle of an election year too, I think that will also be motivation for the federal government to keep interest rates low. The Federal Reserve has been very involved in this process, and I feel like they need to keep the housing market strong in order to keep the economy strong, keep buyer confidence up. So I think overall interest rates will remain nice and low to make sure that that happens. And I know I've mentioned this before in talks with you, is that historically, the real estate market has always done well after, crisis situations like this. So I feel like something is absolutely going to pop here in the next 30 to 60 days where people will feel more comfortable with the process and we'll get out there again, and more homes will get listed and more buyers will buy.
Absolutely. Of course, everybody is eager to get back to work. Nobody wants to sit at home, and yet at the same time, people want to stay safe. So
Right.
it's a tough situation people are in. It is so important right now for especially first-time home buyers that these interest rates are staying where they're at. And that's where I see a lot the movement right now as far as the activity in home purchases, right in that first-time home buyer window of anywhere under $450,000. There's such a huge, really, amount of difference in a monthly payment for a buyer, just 1 percentage point. So the buyers that are really looking to buy right now would want to buy, they're waiting for the right house because interest rates, when was the last time they were this low?
Yeah, we're looking on pretty much almost a decade. 2013 probably is the last time we hit low threes.
Mm-hmm.
So, seven and a half, 8 years.
And I know you might not have an exact number, but let's just say somebody was interested in buying a home around $400,000, and what would be the difference in their monthly payment approximately with a 3.5% mortgage to a 4.5% mortgage?
A couple $100 a month for sure on average. So that's big money. And then what I'm seeing people doing now is actually taking that savings that they're getting by the lower interest rates and potentially bumping themselves up, if they can afford it, into a little bit of a higher price point, simply because they're taking the same amount of money and using that to their advantage, just because the cost of borrowing money is cheaper.
Yeah,
so I encourage people to run the numbers, make sure that everything makes sense, but also just keep in mind that the market is still moving forward, and people are still selling, people are still buying. So don't be discouraged at all, and actually work with professionals like you and I to make sure that people are getting themselves the right information about the market. It's just like you said at the top of the call. People think that the market has come to a grinding halt, and that is in fact not the case. So.
Yeah, absolutely. Actually, as soon as we're done with our call, I'm heading out for a couple showings with my clients today, as well. Well, we covered a lot of great information today. I really appreciate your time, and I think this will be very, very helpful for the people out there who are interested in what's going on in both the real estate and the lending industry. Do you have any final thoughts you'd like to share before we sign off today?
I would say just for now, if you maybe 30, 60, 90 days ago talked to a lender and ran the numbers and try to get yourself pre-approved, to re-engage and do that now, because there may be some things that might have changed in terms of guidelines or policies. Interest rates have come down a little bit, so maybe the numbers will look a little different. But I feel like now the lines of communication have to be open more than ever. And to work with somebody that you trust and that you know is going to get the deal done is more important than ever right now.
Right, exactly. Great advice. And I tell my clients, especially first-time home buyers, sometimes they're a little reserved in asking questions because they're afraid it's a silly or a dumb question. And I tell them, there's no such thing. This is a big investment. One of the biggest financial investment most people make is in buying or selling their home. So any questions that you have on your mind, let us know about it, especially during this time, probably even more questions than normal. And if we don't have the answer, we will make sure that we get it for you. Because the bottom line is we want home buyers, home sellers to feel confident in the decisions they are making in buying and selling homes. Mike, it's been a pleasure again, and I appreciate all of your information and your expertise. And I know this is going to be very helpful for many people out there. And before we log off, and I will put a link to your profile, but what is your contact information if people want to reach out to you about getting pre-qualified?
Sure. Yeah, thank you for that. My cell phone number, best way to reach me is 773-220-8859. And my email is mgambatese@rate.com. That's GAMBATESE @rate.com.
All right, fantastic. Thanks again.
Thanks, Slav.
Slav Polinski Homes in Downers Grove at Properties. Make it a great day.